All right, what's going on out there, traders? Another one here from the Dark Side family. And in this particular video, I want to walk you through the perfect entry scenario on GJ here. There's a great sell opportunity that just took place, and I want to walk you guys through from start to finish on how to identify these scenarios and how to get into them, more importantly. Now, again, this really has nothing to do with any particular strategy or concept. It's more focused on the same things we talk about all the time, and that's patience and that's structure. So let's get right into it. First and foremost, this is live price action right now, July 14th, 10:30 a.m. New York time. And what I want to do real quick is just to give you guys a feel for what's going on. We're going to identify the structural swing points, okay? And we're going to go ahead and back the chart up a little bit and walk us right into it. Now, the thing to remember here is regardless of the strategy that you're trading, whether it be smart money concepts, order blocks, or imbalances, the fact remains that the structure is in place where price is making lower lows, lower highs, lower lows. So it makes sense to anticipate a price to move into this area somewhere in here to potentially continue into the same direction and follow the structure and the trend of lower highs and lower lows. So that's what's making our eyes focus on this area. Now, if you want to say you're trading smart money, you can go ahead and identify this area as a 1 hour order block or imbalance here. Now, they would be looking at this last buy candle that led to the sell that broke structure. It doesn't really matter. Again, you're just pointing out the imbalance, and you're keeping in mind that there's a chance that price could change direction in this area if everything adds up properly. Because if not, you're just gambling on these zones. And whether you guys like to admit it or not, these zones are failing more and more every day. So we can call this a 1 hour imbalance. We could also call this a 4 hour imbalance or order block. Again, it has nothing to do with what this is here. It's everything else, but we're going to try to get into that. But again, we're watching this zone, and we're anticipating price visiting this zone and collapsing from here. Now, again, when we talk about patience, all right, if you just simply look at this chart for 1 second, you can see how they've already manipulated the first round of impatient people in the market. And we can see that here. I'll identify it real quick. Higher high, higher low, higher high. Price breaks structure right here, okay? Then it runs up into this area, inviting them into the market, all right? And then it takes them out of the market. Now let's go a little bit deeper into that, just so you can see how vicious this stuff really is, okay? If we look at this zone here and we back up the chart just a little bit to show this how this happens, we'll identify, again, the same scenario. And remember, we just spoke about that. It's not about order blocks or imbalances, because here's the exact same scenario where you have the same candles, the same imbalance and everything here. You have the same scenario here. Call it an order block, call it an imbalance. It doesn't matter what it is. It's when it happens and how it happens that's important. We can see what happens every day. It comes right in here. It acknowledges the zone, okay? It knows that you're selling the market at this point, and it knows that you're keeping your stop right around the high. They know what you're doing. So price is going to acknowledge that area, and then it's going to run and take you out. Okay, now look at the way it takes you out with the rocket. Okay, you see how it does that? That's intentional. This is completely manipulated. That's why it gives you some hope. It waves the flag to let the sellers in. It gives you a little bit of downside right here, and then it rips your head off. And again, this is just one of those things that happen every single day in the market. The closer you look, the more you'll see, okay? So now that that's taken place, remember, the FOMO guys, they had to get in there. They're already out of the market. Now it's the next round. Prices again dancing, 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 showing descending order flow, descending structure. Again, they're trying to make you enter the market prematurely, because now you're thinking, okay, that was the stop hunt right there. That was the liquidity capture. Now this is the area where I'm supposed to enter the market. So what do they show you? They show you descending order flow, lower highs, lower lows, lower highs, lower lows, lower highs, all liquidity building, because you're going to enter here, you're going to enter here, you're going to enter here, all again, because the FOMO is kicking in. Instead of being patient and just waiting for your zone, like we tell you, okay? So price is going to run up, run up, run up, run. Again, it's giving these people hope. It's giving them hope, because there's people who are looking at it like this, and they're looking to sell the market from this area. So it gives them hope. It gives them a reaction, and then it rips their heads off and takes them out again. So now, if you were able to avoid all this manipulation and frustration, as we like to call it, now price has entered your zone. Okay, and now is when you're going to want to go to low time frame. Again, depending on your style of trading, if you're looking for maximum risk-reward ratio, you're going to want to play around on the 1 minute to 2 minute to 5 minute, and you're going to want to watch for the slightest little imbalances that are left behind. Again, this is the perfect entry model. The problem with the perfect entry model is people try to build their career around it. Okay. And the thing is, it doesn't happen that often. It's more likely that price doesn't do it than it does it. So therefore, it makes no sense for it to be the only way you enter the market. So if you're just waiting for break of structures all day long and you think that the whole world isn't waiting for that, you're wrong. When price comes up into this area and hits this perfect little imbalance left behind, that's an example of the perfect entry scenario. Now, reality is that price very rarely does that. Instead, you'll see price leave from here maybe, or you'll see price leave from here and exceed it maybe. Price will do whatever it wants. Like I always tell my guys, they do what they want, we do what we can. So if you're going to build your entire entry model and entry scenario around waiting for the perfect thing to happen, like what happened today, you're not going to be in many trades. You're going to miss a lot more than you're going to make, and you're going to just be left on the sidelines way too often. That's why we don't encourage any rules when it comes to entering the market. Instead, you should be more focused on your target. But that's an entirely other video in itself. So now that price is in the zone, we're just waiting for a break of structure, right? We haven't had one yet. Whether you want to force it or not, you can't. You've got ascending structure, okay? You got price pushing up into these zones and continuing to push up. There's no break of structure anywhere in here. This is for the people, again, the FOMO people who see price hit the zone, they immediately enter and they immediately get taken out. Another thing we always say, first person in the market is the first person to be taken out of the market. You got to be patient. All right, so let's just watch price dance around there for a minute. And now we're starting to see a break of structure. Okay, now we're seeing where price has made a clear higher high. All right, you see the clear higher high, higher low, higher high, break of structure. Okay, break of structure. Again, higher high, higher low, higher high, break of structure. So now we're going to look. Now remember, I told you price can leave from here. Price can leave from, it can exceed it and leave from here. It's very rare that these things actually happen. But when they do, they give you the absolute best return. All right, so we're going to walk through this one a little bit closer. What we're waiting for now is this imbalance. There's one final imbalance that hasn't been filled in the market. All right, just go ahead and draw that out. Same thing that we talked about earlier in this video. Imbalances, order blocks, you can call them what you want. It has nothing to do with them. It's what happens before them that makes them valid. Okay, so when you have a pre-market outlook and you're targeting an order block that's maybe 100 pips away, you have no idea what it's going to do when it reaches that order block. And if you just decide to sell when it reaches it, you're gambling. I'm sorry, but that's what you're doing. You're gambling. Now again, there's no touch of the zone yet. It looks close right here, but you got to be patient. You got to wait for the zone to get hit, okay? Once price actually hits the zone, now you've got yourself a valid sell idea, okay? You can go ahead and enter the market right here. Now, I never recommend that you put your stop above the zone for 4.9 pips. It doesn't matter. Don't do it. It's counterproductive. It's more likely that it won't happen than it will happen. And at the end of the day, you need probability to be on your side. So if the probability is that price is going to go down, that's a good thing. But if the probability that it's going to go down at this exact second, that's a much less likely scenario. Although it happens sometimes, you're not trying to do anything sometimes. You're trying to do things all the time. You're trying to be consistent. So therefore, don't put your stop here. Don't even put your stop above this high. Put your stop at minimum above the entire zone, and even then some. Because if you've been trading long enough, you know damn well by now that price loves to come up into here, wick you out of the market, and then go in your intended direction. Now, again, they do what they want. We do what we can. You know what we can do to help? We can bring ourselves to a higher point in the market to create a larger cushion, a larger area for error, if not on our part, and allow them to do that without taking us out. So do yourself a favor. Stop doing this. Stop doing this. Start doing this. We say in every one of the videos. Again, now if you're in the market from here, you're in your zone, you're anticipating downside, and then you're going to watch it. What happens? Price will continue to the downside, and it's a really great short. Again, if you really wanted to do it that way, you can see that you would have given yourself a 9.7 pip stop loss. I don't recommend that, especially if you're not really up there with your market IQ just yet. Your goal should more to be in the position than to being tapped out of the position. And that's why I always encourage bigger stops. But if we just let price go to current price action right now, you can see that you'd have a healthy trade right here. I mean, this is an excellent return. Just right here would be 1 to 14. at this point. And again, we're using a 9.7 pip stop. If you bring it up a little bit, again, you're at 1.7, or I'm sorry, 7% return, 8%, and this still has plenty potential to the downside. Now, 7% return is excellent, and with this big cushion, you're not going to lose any sleep on this trade. It's a very safe trade. And then when you look at the potential where price can potentially go, you can see that there's also ascending structure here. So price can very easily run into this area right here, okay? Price can easily come into this area right here based off of ascending order flow. Low, high, higher low, higher high. So if that was to take place, look at what you're doing. You're putting yourself in a position where you could make a potentially 18% return. Now, if you guys are trading prop firms, stuff like that, 18% return, 1% risk, that's $18,000 on a $100,000 account. Very nice trade. And again, you're giving yourself the highest probability of it playing out in your favor by not giving yourself a tiny stop. These entries happen not very often, but when they do happen, they're a great way to get into the market. I personally trade GJ a lot, and I haven't seen an entry like this in a while. But I also don't worry for entries like that. I'm not concerning myself with seeing that in order to enter the market because I use many other confluences to get in. But this was just a walkthrough on how to actually get into the market with the perfect entry scenario. It puts you in a really good position, because again, you were able to avoid the manipulation right here, okay, where price invited you in, take you out, okay, you avoided all that, and you were patient enough for wait to price to hit your zone and then break low time frame structure and give you the 1 minute imbalance, ultimately giving you the entry and potentially some really good downside. Now you're going to have to obviously watch the market. This is live price action. See where it ends up. Remember, you've got trend lines that are coming into play now. You've got order blocks or imbalances right here for people seeing ascending structure. So you've got different scenarios to tackle. Price going to bounce from here? Is price going to go through here? These are all the things you've got to keep in mind when you're managing a position. But again, that was just something that I saw today, and I thought it would be nice to share with you guys. Again, there's no real strategy here. This didn't work because it's called an order block or an imbalance or any of that nonsense. This worked because of what takes place before it. You see your manipulation, you see your frustration, you have your confirmation when price enters the zone on the 1 minute time frame, break a structure into the imbalance, and continue to the downside. So I hope you guys can utilize this. Again, structure and patience. Give yourself a chance to get into the market. If you're having an issue getting in too early, watch our previous video about Wyckoff. Understanding schematics is going to keep you out and keep you away from the premature entry. So hope you all get some value out of this one, and be sure to follow our Telegram, and we'll talk to you soon. Thanks, guys.